Welcome back to the Stablecoin podcast. I'm Luther here with my amazing co-founder and co-host Rami Soleiman. Today's guest is Ran Grushkowsky, co-founder and CEO of MassPay, the global payout orchestration platform that processed billions across 230 plus countries last year and just put up a huge whopping 317% volume growth in Q1 of 2026. Today, we're getting in why global payouts are still broken, how stablecoins are turning from a trading instrument into a real settlement rail, and what it takes to build this infrastructure at the enterprise scale. Ran, with that, welcome to the show.
Thank you for having me, Luther and Rami.
I've been working with MassPay back from my time at MoneyGram. Worked with Logan, who's on your team, who's absolutely amazing from that perspective. I think the work that you guys do, which is the distribution of funds, this is the B2C distribution is kind of how I always thought about it. But there's so much more that you guys are doing from that space. And there's so much more that people don't really understand, but would love to kind of get your thoughts. I mean, this is not your first startup, right? You've had a couple of exits in the past. Can you just kind of walk us through like how you got to the starting of MassPay and what you guys do?
Yeah. So again, good to be here. A bit about the road that led us here. So myself, been in remittances. You mentioned Logan. Him and I have been working together for about 15 years, or even more now. So about 20 years ago, I got into remittances, cross-border remittances in the US. Everybody knows MoneyGram, Western Union. Our goal was to move this online, and we were one of the early online remittance companies in the US. And learn a lot about remittances. Learn that in remittances, it's really hard to change behaviors. Grandma, who receives the money on the other side, dictates how money is being received. Even if you can do it cheaper, faster, more efficient for you, you're not going to change the way grandma gets her money. And that's something that we learned really, really hard in remittances. And then about 5-6 years ago, I sold my last company, USEN, to Banco Inter. And we've learned that world that exists in remittances does not exist on the business payments. When you look at B2B or B2C, if you are a seller on Etsy or you're an influencer on social media platform, the way they pay you, that's how you get paid. If they pay you with a prepaid card, you have a prepaid card. If they mail you a check, you get a check. You do not negotiate or dictate the way you get paid. And we felt that as COVID is ramping up and people are working at home and looking for secondary income, maybe opening a side gig online, there's an opportunity to offer businesses and individuals the same luxurious offering that you have in remittances, but on the business payments. Why somebody who is working for a company online cannot have the same optionality that grandma when she receives her money? So that was the premise. And knowing what we knew about payments for, 20 or cross-border payments for, at the time, 15 years, we knew it's doable. We didn't understand how complex it would be. Teaching all those rails that we worked with for many years to tell them, hey, I know you know C2C, but now you're going to do B2B and B2C. It was like big difference for them, even though it's the same movement, right? You're moving money from point A to point B. It was primarily driven by regulation and compliance, because every program needs to have the right compliance oversight, understanding who they're facilitating the money on behalf, and they got a really good handle on a person to a person. But when you're talking about a business to a person, or even more complex, business to business, then it felt like it's a whole new world. So just like we've done in remittances, where we had to educate at the time regulators on what it means to do online remittances and how do you do KYC online, we had to go through the same experience teaching financial institutions what does it mean to do B2B and B2C, and enable us to be that company that bridges and gives access for businesses to their rails. And fast forward, 5 years now, almost 6 years, MassPay has built very tremendous infrastructure to bridge the same optionality that people have called in the remittances world and beyond. I mean, we've grew beyond what we used to offer in remittances, but now give access to businesses to leverage the same way. And that drives better adoption. It drives access to markets that maybe they couldn't serve before. There's big portions in the world that are still underbanked, and people want to get paid through cash or mobile wallets, or obviously now stablecoins. And giving easy access to businesses to do that was something that we felt is necessary. And clearly, 6 years in, we've demonstrated the market is really hungry for that. They just didn't know it exists.
That's fascinating. Actually, I wanted to ask a question then. In terms of the portfolio of products that you offer to businesses in terms of the cash out solutions, how does it rank? Are some more popular depending on the geographies? Are you able to give us just a little bit of an insight into that?
Yeah. So, just like remittances, it's very diverse. Every country has different appetite. I mean, if you look at the US alone, up to maybe 10, 15 years ago, we had ACH and wires, checks. That's it. Now we have Venmo, we have Zelle, we have RTP, we have FedNow, we have OCT. I mean, and it's a growing list. And this is just the US. We've seen the same trend all over the world. I mean, Brazil, which is a country that I've done a lot of business in, Pix overnight, overshadowed like everything. Like every existing rail, Pix, boom, overnight. So you see different trends in different markets. Cash is still king in some countries. Obviously, stablecoin is becoming a thing in many countries. So every recipient, every country has different appetite, and to be able to provide the same level of access from the sender is not an easy task, because real time is becoming a thing, and people demand real time, and that demand is growing, and achieving cross-border real time is challenging. Obviously, stablecoin has its advantages, but not everybody wants a stablecoin. In most countries, you cannot go to the supermarket with your stablecoin wallet.
Yeah.
So you need to have different rails, and that's what we offer. We offer that optionality globally, supporting real time. Not easy.
Not easy at all.
Indeed.
And you guys, I mean, having almost 320% growth in last quarter shows that the demand is being met by you guys. But if you kind of dial it back, I don't think quite often people don't really understand how much is this total addressable market TAM when it comes to B2C, right? If you think about some of the verticals that commonly fall in the space, can you just expand? Like, I mean, you mentioned Etsy, right? It's like a marketplace, but what are like the large verticals? Because there's payroll, all these like, so kind of if you think about the large verticals that you service, what are they generally?
So it's quite horizontal. And by the way, we are not just B2C. Probably about 70% of what we do today is B2C, but we also have B2B, which is a much bigger TAM, traditionally served by the banks. And now with the growing demand for real time, the banks, unfortunately, with the SWIFT network, cannot meet that demand. So those companies and those financial institutions are looking for alternatives, and MassPay is really prime for that. So we have tremendous growth on the B2B side. But to answer your question on the B2C, it's quite horizontal. So marketplaces, and our definition of a marketplace is very wide. It's any business that takes money from one party, sends money to another party, and takes a commission. The definition, it's a money transmitter, but they offer value add. So we call them marketplaces. Uber is a marketplace. YouTube is a marketplace. So social media platforms, they have to play influencers, royalties. We do have some very large companies in that space. Marketplaces in general, like you mentioned, companies like Etsy and that they really need to leverage those rails as a recruiting tool and a retention tool, and in some cases, a profit center. Whereas before, paying somebody used to be a cost center, because now you can bifurcate the level of service you offer on getting paid. You can charge for that. So if somebody wants to get paid, let's just use the US as an example, with a standard ACH, 3 days, 5 days, whatever it is, you offer it for free. But if they want the money instantly, maybe you charge them 1% or 2% or 5% or whatever it is, because it's still better value for them than going getting a loan somewhere. So, and wage access is a big thing in the US, and it is a thing everywhere. And giving businesses the opportunity to pay people faster and maybe charge them something for it, because it hurts the business cash flow. So there's a good opportunity there. And we have some very, very, very large clients who've done that start charging a premium for paying people instantly. And it made a significant impact on the bottom line. So payouts is becoming a profit center in some cases, depending on the business case, something that was never done before.
Yeah, a typical treasurer's or CFO's dream, right? When you take something that was a cost center, becomes a revenue center. The original premise for MassPay it wasn't based on digital assets, right? So, can you walk us through the first initial rails that you first used? what markets you use, and then like the pivot point into digital assets like stablecoins.
So we went with the traditional remittance rails that we had relationships with. So all the local, the global networks, those aggregators. We started with the aggregator, the Neum, the tools of the world, because we needed coverage. And then once you start having coverage, you start drilling down and building your own rails. Today we have more than 80 global correspondents. We have more than 15 sponsor banks just in the US. So we have a very significant infrastructure, and this is just on the fiat side. And growing. I mean, we're at a pace of maybe 1 to 2 new ones globally a month. So it's an accelerating growth of the network, which builds more redundancies and better access. It really feeds our engine, which I'm happy to touch on. When it comes to stablecoins, really the promise was we're going to deliver value to people, however they want to get paid. Similar to grandma, if she wants to get paid some way, that's how we're going to support it. We like to joke, if people want us to ship goats, we're shipping goats. Value is value. As long as we can do it scalably and legally, and we understand the compliance around it, we're going to do it. And once stablecoins became more accepted by our sponsor banks in the US and our partnering institutions, we felt it's the right time. And that's when we forged relationships with some of the biggest brands in crypto to provide the same level of access that we do in fiat, but on the stablecoins. Because again, it doesn't make sense to us that somebody who's choosing to get paid through one means is going to feel like they are not getting the same level of service when it comes to speed, when it comes to compliance, documentation. We want to really abstract it. So it's seamless. It's seamless to the sender and it's seamless to the beneficiary.
You mentioned your engine. MassPay is not a solution where I just on ramp, or I just, park some funds, and then it's on me to kind of make a decision on how I believe you guys have a very robust engine that kind of does some selectivity and like does some routing based on preferences, etc. Maybe you can elaborate on that some more, please.
Yeah. So we have 2 ways where clients utilize us. The preferred way is what people are most accustomed to, which is I owe you, Luther, 100 euros. Here's your IBAN account, and we send it to your account. And in that option, our engine is plugged into, I think today it's about 8 banks in Europe that have access to the SEPA rails. And one would ask, why do you need 8 banks? Well, A, redundancy, because they might be down, there might be an issue. 2, risk appetite. Some of them are FX banks. They only want very large transactions. Some of them are regular banks. They only want the low value transactions.
Yeah.
Right. So there's different appetite. Some want to do only B2B. Some only want B2C. So we optimize in real time and identify from those 8 banks which ones like this type of transaction. Great. Let's refund 3. Let's get real-time quotes from all 3 and present it to a client, lock the rate, and send a transaction through. Now, this is a happy path. Now, let's say that the bank rejected a transaction, or even worse, they accepted the transaction and then rejected it after like 10 minutes or an hour. Right? It happens.
Yeah.
Our system automatically takes the transaction back, look at the second best, still guaranteeing the original quote, and fulfill the transaction through, and automatically goes and tries again and again and again. So our client has a much higher deliverability of the funds with the best rates possible because our engine is able to automatically do this. Now at scale, it's very, very meaningful. So we're able to deliver funds where they would be rejected even by our own system if we didn't have this system that knows automatically fail over, retry, guarantee rates, automatic trading of FX. It's very, very complex, but we're able to do it. It's even more complex because every bank has their own way of accepting the information. I mean, I like to use the example of China. We have few integrations with Alipay that I don't remember the number. I think maybe 2 of them wants the name in Chinese and maybe 2 wants it in Latin. So we're going to ask every permutation of data from every client. It's complex. So our system knows how to take it and automatically convert it to the appetite of that institution. So it's exactly how they want it. And to really show people that we don't own dog food, if you will, we use our system. But more importantly, we only charge for successful transactions.
Oh,
So
wow.
if we're able to deliver the money, even though we incur costs, sometimes you send a transaction, it bounces back, we incur costs. We do not charge our clients. So we really know our system works, and we only bill our clients when it does. When it doesn't, they don't have to pay a thing. We refund the full amount and the fee. So principal guarantee, even if there was exchange rate fluctuation. You send a transaction in euro, transaction bounced 3 days later because the account was wrong. The euro rate changed. We know how to reconcile all of it so our clients don't have to deal with it. So that's one way.
That's exceptional.
The
That
second
is
way,
exceptional. Yeah. Yeah.
the second way is I owe Rami $100, but I don't care how Rami collects the money. I don't have Rami's IBAN account. I don't have any information besides his name and email and phone number. So we're gonna issue you, call it a virtual check or an e-wallet with $100. We're gonna contact you via WhatsApp text message or global, SMS or email. We can tell you, hey Rami, company ABC just sent you $100 for this reason. You're gonna activate the account, and then you're gonna have all the options that we have available. So you're gonna see, oh, I can send it to my USDT or Solana crypto wallet, or I can pull it to my bank account in Dubai. Whatever it is that you're looking for in the country that you reside in, matter of fact, any country around the world, because maybe you are in Dubai, but now you're traveling in the UK and you want to send it to a cash pickup location because you want to pull up some cash. So we have this global network that enables you to pool the money. And because we give you the optionality, we recommended our clients, and many of them do, push the cost down to you. Because now that you have optionality, you'll feel more comfortable saying, you know what, I'll pay for it. Because I can choose what service I want, and there are different fees associated with the service that I'm looking to choose. So this is the second option, which is a growing option because a lot of companies, they want to stay out of scope of PII. They don't want to retain your banking information. They don't want to deal with it. I just know I owe somebody money. I want them to get paid and want to give them the best options when they get paid. So it's a great solution for them.
Very nice. And what percentage of your customer base takes this option versus the other options? Or what's the split?
So legacy companies that are transitioning, they normally already have the banking details. And we have a handful that decided they once they've learned we have this option to just offload it all to us. So they tokenize, we have those big vaults, we can tokenize all type of payout details. They just tokenize it and they remove it from the system. They said, moving forward, just remove the money, log into MassPay. And we support single sign-on, and the user doesn't need to know it's MassPay. It still can be controlled by the client, but they want to offload it to us. Newer companies, so companies have been growing, it outweighs significantly. It's more than 50% of those clients that are choosing, call it a tokenization route. We control the experience because if you don't have it, likely you don't want to have it. Because if you look at GDPR and all those growing, privacy rules that are popping everywhere, we're already dealing with it, but the clients doesn't have to. And it's just another thing for them to push off. It's like PCI, right? If you don't have to deal with it, why do you? Why would you? It's the same type of thing. Companies are looking to focus on the business. They don't want to become payment companies and security companies and tokenization companies. Just don't want to deal with it. And we give them the optionality to either do all of it for them or do a hybrid, or optionality is definitely part of what we like to offer.
No, very nice. Very nice.
As you see the adoption growing, especially from a stablecoin perspective, digital assets, and then this whole like on and off ramping piece per se ran. One of the things that I'm noticing, and we're all noticing, is the compression of the price. Like there's a lot of price compression happening in the space. Like, how do you guys see yourself pivoting and responding to that price compression?
So again, by design, we decided to work with the foundational layers for stablecoins. So we have a partnership that was just announced with Circle that
Amazing.
gives us direct access to USDC and leverage their licensing. So for custody for clients who are interested in that, again, very great partner. We worked with them for several years, but now we're expanding that relationship. So we're very excited about that. We also work with some of the networks themselves, like Plasma, like Polygon, that really helps us, first of all, understand and innovate around those and give access to our clients to access those, but also the cost basis is lower. So it gives our clients really, the same level of access like they do for fiat, but with stablecoins. When you look at the movement itself, or beneficiaries looking to receive payment in stablecoin, there's definitely a growing demand for it, but it's mostly international. We do not see a lot of domestic demand for that for obvious reasons. I mean, if you can access your funds in fiat for no cost, very low cost, instantly using RTP and FedNow, why would you pay a premium, as low as it may be, to get into stablecoins, which then you have to convert back. Globally, we're looking for people looking to hedge their earnings against the US dollars, and the USDC or USDT stablecoins are providing a really good, easy access to store funds pegged to the US dollars. So we do see growing demand for that, but the biggest demand is actually on the B2B side. It's
Okay.
businesses, it's licensed financial institutions that are looking to leverage the speed that stablecoins offer, and the fact that the cost is going down makes it a lot more appealing. The fact that you can do it for single basis points, whereas when we started, you were like at tens of basis points, makes it a lot more attractive now for businesses to move money, because if they compare it to a Swift wire, which takes days, and depending on the amount, can be quite expensive. This is instant. You get, the credit instantly, and the cost is somewhat comparable.
Yeah. One of the things that you mentioned earlier, which is the whole compliance piece of it, compliance is, to your point, it's actually not just part of the product. It is the most crucial part of the product that you're providing that somebody else doesn't have to deal with from their side, right?
Correct.
And I think when you first started, like, how did you see that evolve over time? Because I'll give you an example. We just saw Brazil change its EFX rules, etc., right? Like with the recent regulation change. I don't think that directly affects what you guys do, but in general, you've got this like rolling policy and regulatory framework across the globe. How do you like? How have you seen this kind of get more complex over time, and how do you constantly stay ahead of it?
So again, going back to our remittances world or days, we recognize that understanding the law, having great relationship with regulators, is an asset. It's an advantage, because you can do things that others, just by not understanding them, will not do them. So we were able to support stablecoins relatively early, just because we could get our sponsor banks comfortable that we understand it. So we see compliance as an asset if you have the right people. Matter of fact, compliance is the largest department within our company. So we heavily invest in compliance to have a good grip on this, but also enable our clients to reduce the friction. So I'll give you an example. We all need to collect IDs for sending transactions, and most of our clients already have it, but we need to collect it as well, and we need to verify it as well. So what most companies do is they tell you, it's great that you have your own IDs, but you need to submit them to me, and I'll run them through my vendors, and I'll verify them, because that's what my bank supported. What we've done at MassPay, which is quite unique, is we went to the top ID verification companies in the world, and we've integrated to all of them. That enables our clients to import data that they already paid for, they're already verified. You don't have to use the tool that we do, as long as we can verify and get our banks comfortable with the tools that you use. Those are known brands. So essentially, we are able to import data, because we still want to stay as compliant as could be by reducing the friction and the cost to our clients and the pays. So we're really putting a lot of thought into compliance and making sure that we can achieve the highest standard of compliance while not introducing additional friction. And it's possible, and that's what we're able to do. We call it embedded compliance. So really, our clients are able to embed our flows, the data we need to collect, into their existing onboarding. So it's seamless to the client. They don't have to be redirected to another vendor and onboard with them as well. We can essentially collect all the information that is already available to the client. Whatever is not, we augment it so we can collect additional information.
Wow.
And import the data that is already collected through third-party vendors. And if you talk about global compliance infrastructure, the complexity is another added value of why people don't want to do it in-house. Because if it would have been easy, do I want to outsource it? It's a buy versus build. But the more complex it gets, you want to leave it down to the professionals. And that's what we do. It's our job to work with our local partners in every country. We have local entities in many countries that we've set up. It's understanding, working with the various law firms, understanding the regulation, understanding how we can adapt to the new regulations, making sure that not only we stay compliant, our clients stay compliant. And without introducing additional friction where possible. Sometimes friction is friction, but our job is to try to reduce it at scale so our clients don't have to do anything. And our system was built in such a way that whenever there are new requirements coming in, our clients don't have to recertify and reintegrate. It just populates in the screens of information needs to be collected by their payees. So it's a very seamless experience that It's 20 years in the making. Like, we're learning from the remittances world, understanding compliance, which is in a way it's harder because you have cash transactions and you have different types of regulation you have to adhere to. But on the transaction monitoring and the KYB and the KYC, coming from remittances, I think we had a great advantage in the B2C and B2B world. And we're really leveraging it and enabling our clients to ultimately offer better experience than what their competitors are going through. They do not use us. And we had one client that went before they joined us.
Mm-hmm.
They asked us to sign a non-compete with some of their top competitors. And we asked them why. Because they said every time they introduce a new feature, all the direct competitors copy them. So we did.
Oh,
We gave them a 12 months exclusivity. And they were right. Within 2 months, all their competitors, everybody they put on the list, almost everybody, reached out to us because suddenly they offered something significantly better than what they did with less
yeah.
friction. So we believe that compliance is a burden that can be turned into an asset if you invest in it and you build the right frameworks around it. And we've done it from day one.
That's amazing. I want to get your thoughts on something which is a little bit adjacent to the whole stablecoin piece, which is something that you mentioned. You're able to pull data if it already exists from providers that your customers have relationships with. Like, so I'm thinking in a scenario like, I use some sub and then you use some sub, and then instead of you going and re-KYCing my customer, you're able to just pull some of the information. The concept is so it's not new, but I think it's something that's plagued all of us in the payment space. Like I get KYC, then I go somewhere else and I get KYC, and it's KYC by the same company that
Right.
in the same. And you're like, why am I having to provide? Because I know some sub you have my information at 50 different places. Like,
Right.
do you see that changing quite a bit in the near future with on-chain IDs, etc.?
So I believe some sub recently introduced shared IDs where you can
Yeah,
token your own ID relatively recently. But I do believe that the vendors themselves, so the payment companies, the companies that collect the IDs, I think they can do a better job at just being able to migrate information from other vendors, just like MassPay has. I mean, don't get me
yeah,
wrong. It's another integration to maintain. It's another relationship to maintain. It's another policy to write. But ultimately, our job is to make it as frictionless as possible. Compliance shouldn't be this big to do. You just have to achieve it at the highest level, and technology today can do it, especially with AI. We can do so much more. There's a lot of data out there that we can buy and license, so we don't have to collect it from people. Like I don't need your state registration document. I can buy it.
yeah,
Who has that? Nobody does. So why introduce friction where you can still verify the data, achieve probably a higher level because you're getting it from an independent third party without insulting the client? So I don't know that the blockchain is going to be the factor here.
Mm,
I think it's just companies willing to invest in customer experience. And I think for way too long, especially on the B2B, B2C side, companies got away with inferior experiences,
yeah,
which translates to both the compliance side, but also on the distribution side. We only offer
yeah.
prepaid cards. This is how you get paid. And the fact that, I mean, the reason it resonates so much with me is that first company I launched in the remittances space was a prepaid card product. We produced a
Okay.
card in the US, we shipped it to the other side of the world, and grandma got a prepaid card. And we learned relatively quickly, A, grandma doesn't want a prepaid card. B, there's
Yes.
so many issues with having a prepaid card in different types of countries, because let's say I send you $20 on a prepaid card and you're going to an ATM. In Bangladesh, you cannot pull $20. Maybe you're going to pull 18.5. And what do you do with the money that's left over? Prepaid card is not a good solution. But then if you look in the B2B side or B2C, until today, there are companies who are leveraging prepaid cards to pay people. And I know from the remittances space, this is not the way people want to get paid. So
Yeah.
people for a long time got away with paying however they wanted, something that was more advantageous for the sender than the beneficiary. And I think it's time for this change. And MassPay is definitely proving that the market wants this, driven by the payees. And ultimately, the senders are going to have to respond because people want to get paid however they want to get paid. They don't want to provide information already provided. People get spoiled. And for a reason, they should be. And MassPay is doing, I believe, a really good job at addressing both on the compliance side and on the optionality side. And ultimately, we productize the whole experience. We didn't just productize the interface or the onboarding. We productize our whole experience. So when the clients, our clients and our clients' clients, the payees are interfacing with MassPay, everything has been thought through. Everything is productized to improve the efficiency and the experience.
Yeah, I mean, this is effectively compliance as a service. You're effectively giving that compliance to your customer and then downstream to their end customers and their payees. But you're giving, it's two things. You're sort of compliance as a service. It's almost onboarding as a service, and it's payout functionality and flexibility as a service. That's the three verticals really that are all now moats and are all monetizable. Like you said, at the moment you flip the narrative where just paying someone used to be just a cost center, but now actually you're right. If you want to get paid by stablecoins, it's instant. If you want to get paid Fed wire, it's not. It's free or whatever. You know, you can start to make it a profit center for your business. No, it's very good. It's very good.
Yeah, and we don't like to call it compliance as a service because our clients are not outsourcing their compliance to us.
Right.
No. It's the onboarding and verification as a service that allows the money flow effectively to happen. Already, you know. Yeah.
Right. I mean, we still demand that our clients do their own AML policies and their own CAP programs. So they still have their own, but we augment it. We call it trust but verify. So we still run our own programs. We have our own transaction monitoring. But the idea is to reduce friction. So if the client already knows ahead of time, it's going to be a bad transaction, prevent it altogether. There's no reason for you to even enter the ecosystem. So we do require our clients do have a compliance program in place, but we augment their compliance program with our own embedded components, and we import whatever work they've already done. So there is no repeat cost and repeat friction for the ultimate users.
Yeah, no, makes sense. Makes sense. Augmentation as a service, then maybe, and then I think for you, Luther, I think I was thinking about this sort of 8 years ago. I thought that would have been one of the, it was an annoyance because, again, we were in banks and financial services and people were coming to you where they'd been KYC'd in one place and wanted to KYC with another place the next day. And it was like, okay, maybe tokenization is the way to do this. If you can have a blockchain-based token that was your ID. And this was about 7, 8 years ago and no one really cracked it. But now I feel like people are getting around to doing this kind of solution. So it's interesting to see where that goes and how you'd embed it ran into your workflows as well.
Changing topics a little bit here, and for the folks listening, I don't know if you caught this, but huge congratulations on your partnership with Circle, because that's absolutely amazing, Ran.
Yes.
Love what Jeremy's doing. Some of the work that they're doing is not just transformational, but it's foundational for the rest of us in this space. So it's huge, and that's amazing to see you guys work together. Along with that, you've also recently announced pay-in 35 new currencies.
That is correct. So we are now giving our clients the ability to deposit funds into 35 currencies, which makes it a lot more efficient for them to pay like for like without any FX conversion. And just being able to accept their deposits from anywhere to conduct business globally, which we're really excited about.
When it comes to global pay-ins and payouts, and then when you try to cross that using stablecoins in general, the one thing that we've often talked about on this show is liquidity, right? Like, so you just don't have the right levels of liquidity, which then creates this like varying expense piece when it comes to like, how do you manage the FX? The FX spreads are not the same. Mid-market rates in a standard FX market versus the stablecoin side of it, compared to like where the pay-in or the payout is happening. You must have like the most amazing FX desk sitting back there with you trying to figure out all these different things, especially when you're honoring the client's quote from like 2 days ago or something like that, right? So can you kind of walk us through that? Because that sounds really daunting.
So we have an amazing team on a financial operation. We also have great technology that allows us to manage and project funds movement. And ultimately, we have amazing financial partners. Both on the crypto side, we work with some of the largest liquidity providers in the world, those big market makers that Coinbase and Kraken and Binance they all use. We've been tapped to them directly, which not only reduces our cost basis, but also gives us significant liquidity in real time. And then on the fiat side, again, we have some great partnership with JP Morgan and some other large institutions that we can leverage for trading. Ultimately, the power of our system is wherever legal, we do netting. So part of the growth of money in 35 currencies is it gives us more optionality to reduce FX conversions. So if we can collect, let's say, €1 million a day, and we pay €1 million a day, we don't actually have to convert that euros. And at scale, in very large currencies, concentrations like euros, like British pounds, like Australian dollars, Canadian dollars, we already do that. So we are able to reduce significantly the cost because we take money in. And it's not a one-to-one match, but it helps a lot when we do payouts. And again, we are really, really excited about the addition of those currencies because it enables our clients to do more like for like. So if the client is depositing in Mexican peso and they have payouts in Mexican peso, they can hold the balance and pay it out without incurring any FX, which is a great way for our clients to optimize, and our system supports it globally. We're actually about to announce the ability to also send from anywhere to anywhere from this currency. So you can fund in Mexican peso and send it to euros or send it to stablecoins. So it's not just like for like, but it's from any of those 35 currencies on the inside to any of our endpoints globally, automatically managed by our financial operation system. So it's a very, very cool, exciting piece of technology that we built that we've been working on for the last 5 years and obviously enabling what we do now. But now we're going to open it up from all those 35 currencies to anywhere. And the optimization on FX is taking into place because we know how much of that currency is going to be utilized on payouts. And if all of it is going to be utilized, then the cost for the client is going to be significantly lower because it means we don't have any conversion costs. So it makes it a little more efficient.
And anywhere to anywhere, you're still staying within the B2C and B2B space, right?
Correct. We're not C2C.
I was going to see if you're going to revert back to your roots of...
Yes.
Yeah, no bad habits from there, right? You're not going to revert back to remittances. Yeah, and so totally understand from that perspective.
So if you're going into more currencies, does that mean you're looking at sort of non-dollar stablecoins as part of this growth strategy? Like, I mean, you've got sort of course, USDC, Tether, and maybe some other stablecoins that you might be working with. Are you going to expand that to non-dollar, or do you see that market is still a little bit immature now, not enough liquidity to really match the fiat side of it at the moment?
So again, working with some of the largest market makers in crypto, we don't have any liquidity problems with stablecoins. We can source it. I mean, we process close to maybe hundreds of millions of dollars a month in stablecoins today. So it's not insignificant. And we already support Euro stablecoins. We don't have a lot of demand for that, but it's in our catalog, and clients have the optionality to buy today. So you can buy Euro or EURC, let's say, from Euro for it's virtually one-to-one. It's really close to it, and it's available today already.
I'm laughing here because Rami loves the non-USD stablecoin use case, and I'm starting to believe that he gets paid by somebody in UAE to talk about the dirham-based stablecoin, Ran. I think this is what we were going to find out, is that because he loves talking about non-USD stablecoins. So there's something there.
If there's demand, we'll support it. As you said, if people want goats, we'll ship goats. If they want whatever it is.
Yeah, no, I think I agree. Look, the world is very dollar-based wherever you are in the world. And I think that certainly in the stablecoin place, it's very concentrated. I think it is dollar-based, full stop. But also you need regulatory clarity. There's only a few countries in the world that are getting serious regulatory clarity around stablecoins of non-dollar denomination. So like Hong Kong is one, but that's dollar-pegged anyway. Dirham in the UAE is, again, it's another dollar-pegged stablecoin, so it doesn't matter. So it's effectively, it's all dollars. It's all dollars. So actually, it'll be interesting to see Euro kick off, and I know that there's a few different projects there. So, but at the moment, actually, Rand, you're in the driving seat to see where the demand is coming from or whether it's not coming. So I think it's still a little bit early, Luther. I think this is something we touch upon next year. Maybe there's more information.
At the volumes that Ran and team are processing, they're going to be pretty soon making a few markets here. The volumes that we're seeing, especially in the digital asset space. So that'll be super exciting. One of the taglines that I saw online, which I thought was very creative and amazing, was from net 30 to net 30 minutes.
Mm-hmm.
That's pretty cool, and that's very factual that what you guys are doing from that space. And so um, as you kind of build out from that, build out not just the functionality, and you're adding new functionality as you spoke, new partners as you spoke, and what is one of the biggest challenges that you're seeing that you're like, look, if I could just flip a switch tomorrow and change this one thing, I could grow this and service my customers better. What would that be?
So I think that we've done a really good job operationally to know how to move money efficiently. And when I say efficiently, it's both speed and cost. So we can offer a really, really good product for our clients and the pays. I think that the problem is on the demand side. I think that most people still don't know this is available. And therefore, they're not demanding that, yes, I want to get paid instantly. They're still getting paid with like a prepaid card somewhere. And I think
sure.
that's the switch education. Just people understand there's a better way. There's a better way. That doesn't mean it's more expensive. Like we like to cost ourselves, like we're like a Rolls Royce for the price of a Mercedes Benz. So it's really, really good. It's not the cheapest, but it's a lot of great value. And I think that the more businesses are going to understand that this is available, and consumers are going to understand that this is available, it's better for everybody, because it will show the world where they need to focus. They need to focus on efficient compliance. They have to focus on speed. And I think that it's like water. If the water goes in the path of least resistance, and we do see obviously growing demand, you've just reported some of our growth, and we're not stopping. We're just starting. So I think that the market is definitely responding. I expected it to be responding even more so than it is today, because it's so much better that I don't understand why people are still using those sticks and stones when they can use a spaceship. So, I think that's where the market, and it's not just for the benefit of us at MassPay, it's really for the benefit of the world. Because if you look at credit card debt, and you look at in debt in general, people are assuming a lot of debt because it takes them a long time to get paid. But if they can get paid instantly, they can undercut the rates that they are paying all those loans and still it's a net positive for the economy, not just in the US, all over, globally. So
yeah,
I really feel this is something that needs to happen. And obviously we are taking the torch and running with it to educate everybody. But it doesn't make a difference who to use. You don't have to use us. Use anybody. But just get people paid faster, the efficient ways of doing it. That's what we are pushing for.
You need a campaign with the grandmas. Get the grandmas out and get them to demand a quicker payout.
We need grandmas, influencers, and
grandma influencers. There you go.
Yeah.
I love that. Since you're working in the space, and as we start to wrap up, I feel like we would be remiss if we didn't get your thoughts on this. The Clarity Act is probably going to pass here very shortly. The way that they handled yield, yield for holding versus yield for usage. Would love your thoughts on this, Ran.
If you look at some of our earlier podcasts, I think the end of last year, we called that this year is going to be the year of yield. I think that's what's going to create the best utility for stablecoins. That will give somebody a reason to hold a stablecoin, because today they're disadvantaged holding a stablecoin compared to fiat because of yield. The concern that the banks have around yield, I think, is real. I think that offering a global market for interest rates will make it a lot more compelling for somebody to park their funds in stablecoins, because if you look at inflation in some countries, it's significantly higher than the one in this country, and they will offer a discount to that in interest, because it's still cheaper way for them to get funds, which is better than the Fed's rate in the US. So if you look at the Turkey, and their inflation, or Brazil and their inflation, they'll happily pay you, maybe 4%, which is more than what you'll get in the US. And that is a big problem for the banks here. So it will be interesting to see how to reconcile that, and whether they're going to be adopting essentially capital access through stablecoins as well, because otherwise they're going to lose a lot of deposits. But the genie is out of the bottle. It's definitely going to happen. And it's going to be very interesting to see how the global market, because I think it's really going to become a global market, and how banks in countries that have higher inflation are going to play in it, because I think it's going to be very interesting to see how it's essentially normalizes global interest rate. Whereas today, every market has their own, rates. I think it's going to make it easier for people to access it. And we are very bullish. We've done a lot of work with some of the networks on this, and we're very excited about the regulation is going to support it.
Huge congratulations to you and the team on all the growth and the partnerships that you're forming and announcing here and going forward. Where can people find you, Ran?
So obviously, feel free to reach out to us on our websites. We're all on social media, LinkedIn, X, MassPay.io is our website. Our team is very, very professional, very, very great. And ultimately, we care about people getting paid. So feel free to reach out.
Amazing. Such a pleasure having you. With that, the global payment system was built for a world that doesn't exist anymore, and Ran and the team at MassPay are building the layer that makes it work for the world that does. If you run a marketplace, a gig platform, or any business moving money across borders, send this episode to your head of finance, your payments lead. Like and subscribe, and we'll see you on the next episode. Thank you, Ran.
Thank you, guys.